Good morning, traders. It is Wednesday, September the 4th. Taking a look at the charts, the market continues to be highly volatile. A lot of up days, down days. Today, we're seeing the equities market pop again, up about NASDAQ up 1%, small caps up 1.10%, SP 500 up 0.9%. So we're seeing the market. You can see the green bar here on the daily chart is back up to the upper end of this range. And yesterday, I posted the update showing that the momentum was starting to shift. If we take a look just at this chart, you can see the color bars. It's a little small, but we went into orange bars yesterday, eventually rolled over into green bars, meaning that technically, from a technical standpoint, momentum standpoint, the momentum is shifting to the upside. We've gone from green bars to orange over here, which is when we took an inverse position originally with an SDS play to catch this downside move. And more or less, we're hoping it's going to break to the downside. But today, we're back up testing about 32. We're right about where this red hashtag is, which means the market is going to gap into overbought territory. This level going across here, obviously very significant pivot highs in the market. And if it breaks through here, we're going to see a significant run in price, which was my concern yesterday, which is why we trimmed back our bond position to lock in some gains and reduce our exposure. Because if the stock market does break out and rally, we're going to see the safe havens all pull back and move lower. Now let's just take a look at the big picture of the SP 500. The type of price action we are seeing right here, this range, whichever way it breaks is going to be significant. We had a similar style range over here. Obviously this one broke to the downside. You can see how big the move was. If we break to the upside here, we're going back up to these highs. It looks to me as though there's enough momentum and distance in this range here that we would actually probably poke to nominal new highs again before the market has another big bout of selling. So we could see a very explosive move, at least to 3,000 very quickly, which is a whole number. It's previous highs over here, right through the middle of it. And so that's where we stand today. Let's take a look over at, let's take a look at the dollar index. The dollar index trading down about 0.4% this morning. If we pull up the UUP ETF, you can't see today's price action, but more or less the dollar gapped high yesterday, started to sell down, and today it is trading down much lower, down around this probably this 26.75 area. So it's down fairly significant. Even though the dollar is falling today, gold is down with it about 0.5%. But overall, in the grand scheme of things, the dollar looks like it's could continue to pull back a little bit, and that could actually help precious metals in the long run. We are seeing silver up another percent, platinum up 2.6%. Palladium up 1/3%. So metals in general are going up, but today we are seeing that flow of money into equities and out of the safe havens. And gold is kind of the true precious metal safe haven. So money is flowing out of gold today and into equities. And so gold is bucking the trend. Even though the dollar is down, other metals are up. We're just seeing money rotate out of the safe haven gold and bonds and into stocks. So let's take a look over at bonds real quick. Bonds continuing to kind of hold up here. You could argue this is a little bit of a potential head and shoulders formation, a little bear flag forming. We've got a potential shoulder, a head, and this could be a broken arm, a shoulder, a bear flag forming where the prices come down. It ping pongs around with a bear flag and then eventually starts to break down. We'll have this horizontal low here as a support level, that if that breaks, we could see it unwind even bigger and potentially pull back. So yesterday we ended up pulling some of our play off right up near the highs of the morning. And our stop now is at break even, which is right, I think it's down here, which is where we got long, was on an oversold intraday basis. Down here we got long. So we might end up closing the rest of this position, lock in the gains that we have. We still have gold, and we'll let gold maybe do its thing. We want to reduce some more exposure, lock in more gains simply because the stock market is looking and feeling as though it wants to push higher. It keeps testing that significant resistance area on the chart. If we look here, we're right back up to these highs, and the fact that we're holding above the 5-day and 20-day moving average is a sign that it's got some momentum to the upside, and it's getting pretty bullish on a short-term basis here. Now, if we take a quick look at the SP 500, let me just show you the quick price action that we have. If we throw a Fibonacci extension on the 30-minute chart, we go from the low up to this high and down to the previous low here a couple days ago. It gives us an upside target of where we could see the equities market go. So the SP 500 rallied up, it had this bull flag or this pullback, and now it's on its way to test these levels and head all the way up. A measured move brings us pretty much to the 3,000 mark. And that's right where the market rotated and went into a downtrend. So where price broke down, that will now become resistance area. So this is a bull flag setting up potentially. Price is set to gap right up here at this red hashtag. So things will be overbought. It will be at resistance. The market needs to sell off and crash here, or it's really going to kick off into high gear. There's going to be huge short covering. We see a very quick rally to 3,000 going forward. Taking a look over at crude oil, up 2%. Just move over here to the daily chart. The big picture, very choppy price range. It's still chopping around, trying to carve out some type of bottom here. It is trading in a range. If we look at this range here, you can see here we're trading more or less in this range going forward. So it's chopping around, trying to figure out if it's going to break to the upside and start to go up to the 62, or break down and test this 51 area and potentially all the way down to the 44, which would be the next level if 51 more or less is broken. Looking over at natural gas, up 0.75% this morning. We end up getting in here. It's picking up speed to the upside. Hopefully we'll see some really sharp expansion going higher here. It is grinding its way up, which is nice to see. And we'll let that continue to mature. The next resistance level is going to be right up near this high over here, this 245 area. 255 will be a very significant level as well. But as you can see from our trend chart, we have gone from a downtrend and now it's channeling to the upside. It's picking up speed. It is starting to go fairly parabolic. It's picking up speed, meaning it's starting to go straight up. And what usually goes straight up comes straight back down. So we might start ratcheting up our protective stop, trailing it up. So if it does have some huge reversal, at least we can lock in some gains on the second portion of that position. Anyways, that's it for this morning. I'll talk to you a little bit. Bye-bye.